Well, good morning to everyone. Welcome to the Public Policy Forum's 2025 Growth Summit. I'm Michael Serapio. Now, I'm the host and anchor of CPAC, the Cable Public Affairs channel. This is my third year participating at the Growth Summit, the second year that I've been asked and happily participating as the MC of today's event. And boy, to say that the world has changed in the last 3 months would be an understatement. In the last 3.5 months, the winds of change blowing into our country, well, it comes from our neighbors below, and they have cost Canada not only jobs and investment, but also changed our assumptions about Martin trade and how and with whom we build our future and our prosperity. But of course, the economic challenges that this country faces do not all originate with the U.S. administration. Productivity, standards of living, Canada's competitiveness, these are debates and discussions that politicians and business leaders have been having for years here in Canada. If anything, the challenges originating from the Trump White House just gives us a greater sense of urgency and underlines the importance of the discussions that will be had today. So on behalf of the Public Policy Forum, welcome to the summit. We look forward to your contributions and your discussions throughout this day. See, this is where I inserted an applause line. Just saying. Now, just a reminder to use Slido to send your questions throughout today. You can ask questions of all the panels that will take place on the stage. Slido is the venue where you can do so. The moderators will essentially navigate your questions, incorporate that into today's discussions. And we also want to note that the Growth Summit live blog can be found throughout this day at ppforum.ca. And also happy to say that on CPAC, because this is such a busy time, not everyone's been able to participate with the federal election just so close. But if you have friends or colleagues that wanted to be part of the discussions, could not be here today, I happily say that on cpac.ca, we're live streaming this whole day, and afterwards it can be called up on demand for free, cpac.ca. So with that, I want to begin today with Inez Jabalpurwala, the president and the CEO of the Public Policy Forum. She's going to come up here to set the stage. Before joining PPF in January, Inez was the global director of Vinex, a brain health research organization that she built during the pandemic to study the impact of viruses on brain health. Previously, Inez was the founding president and the CEO of the Brain Canada Foundation, where she raised over $130 million and dispersed more than $250 million in grants. She's been recognized as one of Canada's most powerful women 3 times and holds degrees from McGill University. Inez, I welcome you to the stage.
Thank you so much, Michael. Wow, what an incredible room. Bienvenue à tous et à toutes et merci de votre présence aujourd'hui. Welcome to the Public Policy Forum's Canada Growth Summit 2025. For nearly a decade now, we have gathered a room full of thinkers, doers, influencers, and decision makers to discuss economic growth and prosperity for our country. Canada's Growth Summit has become the place for informed conversations and exchanges on current and emerging policy issues. As we've been building our agenda, we've been mindful of a heightened sense of urgency. Crafting an agenda with lasting resonance has been particularly challenging in a year when the global policy agenda changes at the velocity of a social media post. Over the past few months, PPF has locked on the question of economic growth. And building on the success of our Energy Futures and Life Sciences forums, I am thrilled to announce the launch of Mission Canada, a blueprint to leverage Canada's economic advantage. This ambitious project will find ways to dismantle internal impediments to productivity and competitiveness, accelerate development in energy, critical minerals, infrastructure, and other key producing sectors, as well as diversify Canadian trade. I invite you to join us in this exciting undertaking, and I hope that you'll bring your critical insights to some of the conversations that we have planned about how best to enable Canadian prosperity for all. Today is my first event as the President and CEO of the Public Policy Forum, and I couldn't be prouder to be part of this ecosystem of engaged Canadians who are working to help create inspired policy for a better Canada. Our work would not be possible without PPF's members, and I see many of you in the room today. I'd also like to thank and welcome our partners and our sponsors, many of whom have loyally supported this summit year after year, including our Indigenous ownership breakfast sponsors, Makwate, and thank you so much, JP, and Enbridge, and thank you, Devin, for being here. We deeply appreciate our gold sponsor, CIBC, and I want to single out Chad Shella, who has made this partnership even more wonderful. Thank you so much, Chad. And I want to recognize our silver sponsors, the Canadian Association of Petroleum Producers and the University of Toronto, as well as our bronze sponsors, the Business Development Bank of Canada, Johnson & Johnson, MyTax, and Nuclear Waste Management Organization. Thank you to our supporting partner, National Public Relations, and our sustainability sponsor, Canada's Forest Trust Corporation. A special thank you to our media partner, Politico Canada, and to CPAC. Thank you for lending us Michael again this year. I'd also like to thank all of the organizations that hosted last night's expert pre-summit dinners. All across Toronto last night, groups were huddled around tables discussing everything from local journalism to Arctic security, housing to life sciences, the energy transition to the Canada-US relationship. PPF partnered with Deloitte, Johnson & Johnson, CIBC, the Rideau Hall Foundation, the Canadian Real Estate Association, and Agnico Eagle to deliver incredible events that spanned the entire city, and I'm sure you all heard the buzz around town. I'd also like to thank all of our moderators and speakers today for your talent and time. You are the stars of the show and the reason why we sold out this event weeks ago. I hope you enjoy this extraordinary event in extraordinary times, what one of our board members called an intellectual day spa. And while we can't promise a eucalyptus steam room, I do know that you will leave inspired, invigorated, and equipped with new ideas and enthusiasm to go and make more and better policy. Thank you all for being here, and now let's get on with the show.
Okay, if I knew eucalyptus steam room was an option, that would be on my rider. But Inez, thank you for that. So we will have a lot of discussions throughout this day, but to help get us started, I do want to invite to the stage right now Avery Shenfeld, Chief Economist at CIBC World Markets, to help provide some context and set the stage regarding Canada's current state. Now, Avery is also the Managing Director at CIBC World Markets, a position he's held since 1993. Renowned for his perspective, analysis, and insights on economic developments and their implications for financial markets, Avery is a two-time winner of the Dow Jones Market Watch Forecasting Award and has been consistently ranked among the top Camartan economists by institutional investors. He holds a PhD in economics from Harvard University, has extensive experience in management consulting and academia, and I will also note that I began my career as an intern at CTV, connecting his camera to the control room at 6:45 in the morning. So setting up Avery Shenfeld is not new for me. Avery, welcome to the stage.
Thanks very much, and thanks to the Public Policy Forum as well for inviting me to speak, because CIBC is very proud to work with the forum. We understand that our job is to help our clients achieve their success and their ambitions, but we know that that becomes a much easier job when Canada has a sound public policy background helping our economy do well. And of course, I've been asked to speak about the outlook for the Canadian economy in these opening remarks, and I have to have a little bit of a frustration in doing that, because my job has become a lot more complicated. In fact, I'll put in some Canadian content here. Avril Lavigne, I think, said it best in her song called Complicated, where she complained, why'd you have to make things so complicated? And that's what I say every day, because at the start of this year, or at least looking back to late last year, things weren't complicated at all. The outlook for the Canadian economy for 2025 looked pretty good. We had essentially defeated inflation. The reward for bringing inflation down to 2% was that interest rates had come down from very lofty levels that were posing a significant brake on economic growth. And we had started to actually see the reward from those lower interest rates. The housing sector was starting to tick up. Economic growth had improved. Employment was still lagging a bit behind, but we did see a little bit of a downtick in the unemployment rate. So we were quite optimistic that 2025, 2026 would be two much better years for Canada's economy than we had seen in the prior couple of years under that high interest rate headwind. The result, however, has been quite different. We started the year fairly healthy, but of course we're all now concerned about what is happening to Canada's trade relations with the U.S., not only our relations with the U.S., but frankly, the very high burdens that the U.S. has imposed on trade with the rest of the world, the dent that may apply to global economic growth. We are a trading nation. Even the prices of things that haven't seen a tariff, things like oil prices, have come down, in part because markets are afraid about what the prospects are for the global economy. So where do we go from here? Well, I do have a ray of optimism here, and it comes from the fact that misery loves company. So we started off with just Canada and Mexico, for some reason, being the first targets of Donald Trump's ire. We were facing, at that point, 25% tariff on everything, 10% on energy. That looked pretty bleak. We wondered why we were being singled out. And we were threatening, of course, our own retaliatory measures on the U.S., but those were unlikely to have, on their own, enough of a hit to the U.S. to really dissuade the Trump administration from proceeding along the lines it had started. But then in April, the rest of the world saw its own tariff wall go up, and the response to that in financial markets, among American consumers and businesses that started to anticipate what that would do to the prices of things they buy, not only just as consumers, but as businesses buying inputs from abroad to make things to export. And of course, yes, the retaliatory tariffs that were now not only being imposed on Canada, but by Europe, by Asia, by China, and so on, that was starting to add up to a significant degree of havoc in the U.S. economy and significant worries among American voters who were finally starting to understand that this would hurt them. And we saw Donald Trump's approval ratings drop. We saw business confidence surveys, consumer confidence surveys take a big nosedive. And I think that this sort of company that we're now in with the rest of the world is, in fact, our best weapon in getting Donald Trump back to the negotiating table with not just us, but with 50 other trading partners in an effort to try to dial all this back down. And we do have some hope. And this hope also comes from looking back at Trump's first term when he talked about ripping up the NAFTA agreement, putting tariffs on steel and aluminum, which he did in his first term. And in the end of the day, what did we do? Well, we promised to buy more American cheese. The worst trade agreement ever, NAFTA, was replaced by a very similar agreement, which was now the best trade agreement ever. And we sort of moved on. But there was another lesson from that first term, which is not quite as promising, which is that experience in Trump's first term and the fact that tariffs were put on Canada despite having a NAFTA agreement that should have prevented that. I think it did permanently dent the confidence of business investors looking at Canada as a location for a new facility which was aimed at serving the U.S. market. That was a point that Stephen Poloz, our former governor of the Bank of Canada, has made when he talked at a CIBC event, that he thought we never fully restored the confidence that investors had in seeing Canada as a location to build something, particularly outside the resource sector where you could sort of put it anywhere. You could put it in Ontario, you could put it in Michigan. There was a leaning towards maybe we're not so sure about Canada's free trade access to the U.S. So where do we go from here? We are hopeful that the tariffs do get dialed down, that after a rough patch for the economy, and I know we're going to have a session at this conference on the next 100 days and what those are going to look like. I think they're going to look rocky for a while. But we are hopeful that these tariffs get dialed down, not just against Canada, but against other trading partners, and that we do see a pickup in growth by the end of the year and get the economy moving at least again. But the fact that that negative sentiment on investment in Canada lingered a bit, the uncertainty over trade access lingered after Trump's first term, means that we still will have our work cut out for us in terms of restoring brisk economic growth, the kind of growth that generates jobs, incomes, and wealth, and so on. So plan A certainly is to get back to the negotiating table after our election, try to work out the best deal we can to open up access to the U.S. We certainly don't want to walk away from the idea that our best opportunity for international trade is obviously with the world's largest economy that happens to be next door to us. But what's our plan B, in effect, is what a lot of this conference is going to, I think, talk about, which is what else can we do if we don't fully satisfy our hopes and dreams in terms of restoring free trade access with the U.S., or simply put, continue to face that doubt about what will happen in the future. How can we grow our economy beyond 2025? And we're actually going to address some of that in this conference today. So you hear a lot of talk now about interprovincial trade. Can we do more trading with each other across the country east-west if we're not doing as well north-south? Personally, I don't believe that legal barriers to trade are as important a factor in why interprovincial trade hasn't been stronger than it has. You know, we did an analysis at CIBC. We looked into some of the previous studies and concluded that, yes, it's a worthy effort to try to lower those barriers, and we're going to hear from the Premier of Ontario today, and I'm sure he'll mention the efforts of this province to try to do that. But the reality is that when we looked at the data, what we discovered was that if you took into account the distances to U.S. markets and their relative size compared to Canadian markets, you could fully explain why provinces trade more north-south than east-west. Simply put, if you're in BC, you are much closer to California than you are to New Brunswick, and California has quite a bit of a larger population than New Brunswick. So if you were going to hire someone to be your salesperson in the next jurisdiction over, you might put someone in California before you put someone in New Brunswick. And so to some extent, it's not just about removing trade barriers, but it's about seeing the opportunities in Canada. And I do think two things are going to happen that are going to make those opportunities look brighter, and some of this is already happening. One is that we have seen that Canadians in a mass movement have started to reach out and look for Canadian products. And this is a very interesting phenomenon. It's much more important than our tariffs we put on the U.S. The biggest damage to U.S. sales in Canada, whether it's selling goods or selling tourist trips to the U.S., has nothing to do with anything the Canadian government did. And it's nothing that Donald Trump can retaliate for because the government didn't do this. Canadians did this on their own. They are looking for alternatives to U.S. products. Maybe that's Ontario wine, maybe it's French wine, but it's not American wine. They are looking at Canadian tourist destinations, and they are looking at buying things that say made in Canada. And this is a remarkable movement because there's no leader of the movement. You know, I recall the boycotts that Canada did against South Africa during the period of apartheid, but that was an organized movement, in effect, led by the government. Other boycotts, there's always someone with a bullhorn telling people what to do. There are marches in the streets and so on. This is the most grassroots movement ever because there's no leader of the movement, and yet Canadians are doing it. And so that is going to create incentives for Canadian businesses. Maybe that business in New Brunswick will decide that now it is worth having that salesperson over on the East Coast because there are customers looking for made in Canada products. And this is not just at consumer level as well, but I imagine that Canadian steel companies, for example, facing a tariff if they cross their product to the border to the south, will look for Canadian steel consuming companies in Canada that perhaps were too small a market to have bothered with before, but which now represent a reasonable opportunity. So interprovincial trade, we're going to hear about that later in the conference. That's certainly part of what we can do if we do face a more permanent headwind to trade with the U.S. Trading internationally, also something that we could do more of. There are challenges here too. I mean, the reality is, for example, that in some of the things we make in Canada, it's very easy to look to a global market to sell them. You know, if you're mining diamonds in the north, diamonds are worth a lot of money and cheap to ship relative to their value, and you can sell them anywhere in the world. You don't have to sell them in the US if there's a barrier there. Many resource products have that feature, whether it's minerals, for example. Less so if you were talking about gravel, less so if you were talking about oil, because our pipelines are mostly geared to selling to the US, so we'd have a lot of infrastructure to build, and it's expensive. So there's some products that are tougher. And then when you get to manufactured goods, I mean, I can sympathize with the auto sector, because if you're making a Ford car here in Ontario, there might not be a market for that car in France. Especially if it's a big SUV, for example. So there are challenges in some sectors, but we have, if you look back 5 years ago, actually, the share of our trade that went to countries other than the US was a little higher than it is now. So we could try to restore some of that share. We've been tapping into the US because it's been growing faster than many of our other trading partners. We do need to broaden our horizons a little bit, and that will be also, I think, things that are discussed here. Capital spending will be important because we will need investments designed to expand those industries that can tap those international or domestic markets, which they haven't tapped because the US market was closer and more attractive. And so that does include things like pipeline investments, investments in resource extraction, and so on. We heard a lot about that in terms of Indigenous communities participating in that, but it's a big venture for the country. And I think that, again, we'll be talking about that. And I would also say that services are also very important. You know, this whole romanticization that we've seen in the US with getting manufacturing jobs back in the US is a bit looking back to the 60s and 70s when those factory jobs actually paid more than jobs elsewhere in the economy. The truth is, we looked at US data, the average wage in US manufacturing is actually lower than the average wage in the economy, in the private sector economy as a whole. And where are these other opportunities then? Well, they are in the service sector, in the knowledge economy, where we need to develop our talent, and there'll be a talk about whether Canada is attracting the right talent or retaining the right talent for that. It's in things like AI. It's in services where really there aren't trade barriers. And a lot of the success that the U.S. economy has had, the reason it's been a leader, and I think this is something the Trump administration doesn't really understand, is by developing the intellectual property behind the iPhone, you create a lot of very high-paying jobs in the U.S., even if the iPhone is made somewhere in East Asia. So I think that Canada, that's another route we will want to expand to get around the headwinds of a less certain trade environment with the U.S., will be to expand our service sector, expand the knowledge economy. We'll need to think about our talent in that and so on. So again, these are things where public policy can certainly be a factor in developing our growth. If you look at Canada's natural resources, we tend to focus on, you know, the rocks, trees, minerals, oil wells, and so on. But the reality is, you know, looking at this room, we've got some very naturally talented people. We have a very good education system. We have one of the most educated populations in the world. We are a magnet for immigrants from countries with strong education systems. People who want to leave troubled parts of the world come to a place like Canada where we get along nicely together, but we also can put that intellectual capital to work. And I think, again, that gives me some hope that even if we do have this sort of cloud hanging over us on the trade side with the U.S. in the goods sector, that we have a lot of opportunities that we haven't fully tapped in services in the knowledge economy where we can continue to get some economic growth. So I do realize that this is a challenging year that we're facing. Going back to Avril Lavigne and making things complicated, you know, we understand that the trade talks are going to be complex. There's certainly a fair bit of downside risk to the Canadian economy. We're not forecasting a bruising recession, maybe a negative quarter, perhaps growth this year only around 1 to 1.5%. That's probably less. We might have had a number like 2.5 had this not happened. So it is certainly a disappointing outcome. But there's a lot of risk right now. The risk is that we don't get this trade deal. We know that the Trump administration is volatile day to day. We hear every day it's a different message. And if they did go ahead with the tariffs that they announced on the whole world on April 2nd, maintain the tariff barriers with Canada. If you want bad news, yesterday Trump said maybe he'd raise the automotive tariffs. So, you never know what message you're going to get. If those sorts of things happen, we are going to have a recession in Canada this year because it'll be part of a global recession. And we'll need monetary policy, lower interest rates, fiscal policy, and so on to get us out of that recession. But all the more so, we'll need the kind of thinking that I hope we're going to hear over the course of today on some of the longer-term things that we can do, and not instant cures, to get growth going again on a faster track, make us a bit less vulnerable to the next U.S. president who takes the wrong decisions, and build a prosperous Canadian economy along with it. So with that, I think I'm going to wrap that up and say, hope you enjoy the rest of the day. Hope for the best on those trade negotiations after our election. But time to put on our thinking caps across Canada in those involved in public policy to ensure that whatever the fate of our trade with the U.S., that we can make the best of it in Canada in terms of developing our local markets, our interprovincial trade, our trade with other countries, and our service sector that's not really facing the same sort of barriers that we're now talking about on the good side. Thanks very much for listening to me.